Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So, earnings season's rolling along. We're getting some pretty good action, right? Maybe the overall market not as volatile, but individual names really, stepping up to the plate and starting to get those bigger than anticipated price to moves, and that's really what I personally love to see. And if you guys are trading earnings and catalysts with me, that's really what you love to see also. Stocks that are exceeding priced in moves. It's a great sign. It means that doing your work and finding the setups is getting rewarded, and that's a really really encouraging thing. So coming into this week, I knew, as I was doing my prepping and the research, I knew it was going to be a very busy week for industrials and for semis, for chip stocks. So we've already gotten some industrial reports, SWK on on Tuesday, and UTX this morning. SWK crashed the industrials. UTX was very strong and initially helped out the industrials, although it's been kind of a rocky roller coaster of a day, right? Now it's the semis turn. So you did have a semi equipment name this morning, ASML. They reported that kind of got things going. And then after the close today, you have Lam, LRCX, another semi equipment name. You have Texas Instruments, a big name, and then Xilinx, which has been one of the top performers. Right. Those three are all after the close, and tomorrow even more so Intel, right? And that's what I'm going to talk about here. So again, just a very busy stretch for chip stocks, and Intel, it it could go either way. Let me start off with saying that it could really go either way. It's the options are priced in 2.5 points, and I'm going to talk through kind of what I see, what the options are, kind of indicating. How there could potentially be, a bigger than priced in move here too. So, first off, like I said, the pricing at about 2.5 points. So versus what it's done over the past 3 quarters, that's more or less in line. Just to kind of break out the idea a little bit. So back in October here, decent quarter, popped about say $2. Rounding up. Back in July, thing got wrecked, so it dropped about five. And then in April, you had about 2 point pop. So you average it out, 9 points over 3 quarters. Say it's about three, right? Obviously, the $5 drop back in July really kind of skewed that to the upside a little bit. So if you say 3 points on average, options are priced in 2.5, so slightly below, right? Just like the rough average. Which again is not that uncommon. We've been seeing a lot of options that have been priced below their recent average move. So priced in 2.5. Why I think it's interesting? A few reasons. So first of all, Intel, it might not look pretty, but it's actually been outperforming the sector, right? So Intel, right? You can see here just after it gapped down in July, it's been stuck underneath the 200 day. And while that might not look like the most bullish chart when I compare it to the SMH, which is the chip sector, you can see that it actually has through the period been outperforming, right? You can see. So Intel basically where it was, back in July-ish, right? Whereas the SMH back in July was considerably higher. So while the chip stocks have been rolling, Intel's been kind of holding steady, and actually Intel's the largest weight in the SMH. So it just goes to show you and kind of highlights the outperformance that Intel has seen, even though outperformance kind of makes it seem like it's bullish, but I mean just compared to the overall sector, which has just been brutal and just like a really strong downtrend, Intel actually has been hanging in a lot better. So that presents kind of some interesting scenarios, right? So tight action, right? 200 day, about as clean of an area of resistance as you could possibly find, right? And above that, what do you have? A really extremely well-defined gap from the July quarter. So you have a stock that's more or less been consolidating for 5-ish months, right? Underneath a really well-defined area of resistance with a really clean gap above. So from where it is at the moment, we say 48, right? A priced in move would put it above the 200-day, right? So it's priced in 2.5. It's at 48. That would put it above the 200-day, and then through there you have a really well-defined gap up to about 52.50. So from where it is at 48, there's visibility for potentially a 4-point move, maybe more on the upside, right? On the downside, right? Now, like what that SMH chart showed you is that Intel had been outperforming. If Intel, if the quarter is weak, if the guidance is weak, which a lot of these chip names have really been issuing some downbeat forecasts. I mean, all the stocks haven't gotten hit, but they have been issuing downbeat forecasts. So the problem is if Intel is kind of like a disappointing quarter, then you could start to see some catch up to the downside to the sector performance, right? So whereas the sector is kind of hanging out. So if I go back to SMH, right, whereas it's kind of hanging out down closer to where it was. I mean, it's off. It's obviously rebounded, but it's still back down near the late October lows, right? As you can see, late October low, right, SMH here. Obviously, Intel is considerably off that late October level, which was down below 43. So there could be some serious catch up on the downside. I mean, even just dropping to retest where it was at the end of December, right? Right there, that's about a $4 move. So there's visibility for potentially a 4-point move, 3.5 to 4-point move either direction, right? And it's critical because the chart has been getting just an increasingly tight consolidation resistance underneath this 200-day, and it's bumping up into it within striking distance because you can see back in October. So July it got hit through it, and then the next time it reported, it wasn't anywhere near it. It was down here. So that 200-day realistically wasn't in play the last time reported. Now it 100% is in play, and if the quarter is really good, and obviously some of this is going to have to hinge around whether they get a CEO or not. So that's another overhang, right? So they currently don't have a full-time CEO or haven't announced a full-time CEO after Krasanich left. So that'll be something else to watch. But options are 2.5. Say on average it's moved closer to 3 if you average it out the last 3 quarters, right? But there's also technical visibility for potentially 3.5 to 4-point move higher. And on the downside, if it were to play catch up to the sector, if it was disappointing, or maybe there's no progress on the CEO search, or if it falls victim to some of like the issues that Nvidia and AMD saw, right? If this plays catch up on the downside, I mean, you could be looking at a 3.5, 4, possibly even 5 points down if it really started to snowball, similar to what it did in July, right? So that's why Intel, it's not always interesting. Wasn't in it last quarter, right? But there's different setups, and you really have to do like the research, right? You have to see each individual name each quarter like on its own, kind of like in its own universe, right? So you kind of like, yes, I want to know what it did last quarter, and I want to know what it did the quarter before that and the quarter before that, but a lot can change in 3 months. So whereas like Intel may not have been interesting last quarter, right? And even the quarter before that, it got hit really hard. Now it's like a much different setup. The pattern's been a lot tighter. There's really well-defined levels. The options aren't, they're not pricing in as big of a move as this thing could potentially see. So that's why, you have to look at each setup kind of on its own and look at the merits of it at the time, not compare it necessarily what it did the last couple quarters. I know I talk about that a lot, but you have to look at the setup this quarter. Like Schlumberger, like last quarter was a lot different than Schlumberger was this quarter, and Constellation last quarter was a lot different than Constellation was this quarter. UTX, right? UTX was a lot different this quarter than it was last quarter. So yes, like I used the historical movements as kind of like a guide to what you could potentially see, but then you have to just kind of weigh the setup on its own, in this particular month or this particular week, right? All right, so we're getting going here, right? Earnings are starting to come out. It's going to start picking up. Even though we're about 2 weeks, about a week and a half into earnings season now, we still haven't really got any like the big big like tech reports. So I mean, Netflix obviously was a FANG name, but in terms of like the heavy hitters, right, like the Amazons, Facebook, Google, we're going to start to see those next week. So as busy as it has been, as busy as this week, like the remainder of this week will be, it's going to get even busier over like the next week to 2 weeks. So plenty to look forward to. I'd love to hear what you guys think about Intel, right? How you're looking to trade it. Maybe if you have any other chip stocks on your radar, I'd love to hear from that too. So definitely reach out either in the comments of the video or reach out to me personally via email. But I'd love to hear from you guys. So best of luck if you're playing Intel. Have a great night, and I'll talk to you guys tomorrow.